you're going into new things. But I think knowing that I had the people around me that could help made it easier, and, just willing to kind of jump and see what happened.
And going back to you, John, a little bit, I'm just curious too. So, what did you see throughout this process within Chris that, make you want to commit to a further or deeper relationship?
Yeah, no, we needed, as Chris mentioned, it was probably a little bit earlier than we needed, but we were underwriting. I had originally when we came together, my partner had a couple dollars and he had a balance sheet, and I was doing a lot of the acquisition side of things. But there was a clear opportunity, not only in the asset management side, but to do more acquisitions. And it started with, cold calling and being told no. And Chris's background working for the same people that I had worked for, 5 years prior, I knew that background, because I almost was in the same position Chris was in before Chris even knew it. As a stockbroker, you make 500-600 calls a day. As a broker at Multifamily chat, the goal is 350 calls a week, right? And that's 350 connections. So whereas a stockbroker, you're working, I'd make 800 calls a day, and I'm working from 6 in the morning to 10, 11 o'clock at night. You just go through the time zones. At 8 o'clock here, you're calling California and you're calling Hawaii. So I knew that if I made 600-700 calls a day there, and I only had to connect with 350 people, I knew that someone coming from that background would have no problem in succeeding. And Chris's role was not only cold calling acquisitions, but it was also, reaching out to other properties in the area and doing comps once a week and making sure what are the rents at the other properties. So I knew that having that skill set would adapt very well into our company because I did it. And I'm only one person. If I was calling comps, I couldn't be calling property owners. So having someone else there to help with that was something that we figured, hey, maybe it's a little too early. And by all means, he wasn't going to pay a lot of money. So it was an easy transition where, he was like, hey, I want to learn this. I want to do this. It was big. We had a ton of different visions, and it was easy, right? If Chris came to us and said he wanted, a couple $100,000, maybe he wouldn't have been working for us. But he was a sport, and still is, just, a team player, basically saying, hey, I want to be part of something. I want to surround myself with people doing this. And then shortly after Chris was working with us, he actually brought a buddy of his in to help. He was looking for an internship. And so, we tried to build out a team, and we still, we tried some things here and there, but I just knew the skill set that he had and the job he was in, that parlaying, this thing about a stockbroker that, it's fun. You have a good time doing it, but you're selling a product that you may or may not believe in, right? Trying to call someone up and tell them to buy, 1,000 shares of Facebook at, back when it was $50 a share, not 250 or 300. There's something about that you got to believe in it, but you have no control over Facebook. It's completely out of control. Taking that and moving over to the real estate space where you could control a lot of things, right? No one could control Corona or COVID-19 or any of the outcomes from this. But if you underwrite the deal well for your returns, whatever those may be, and you have a good basis and you have a good location, I mean, bottom line, the wealthiest people in the world that, make a lot of their money with real estate, it's location, 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 and you buy it right. So I knew taking the skill set for being a stockbroker and parlaying it over to what we do was going to be an easy transition. And it was something that, as a growing company, it doesn't hurt to have another set of helping hands and another set of eyes, even underwriting deals. Chris takes a look at it, he looks at it different than I do. And we could have a conversation about it and just say, hey, what do you see? What do I see? How do we get to the, can this deal work? So it was just a skill set that I knew would, transfer over really well.
Okay. Sounded like you saw a little bit of you and Chris as well. And when you guys were cold calling, you were referring to you cold calling brokers, or you calling property owners to try to buy direct?
Everything. We probably didn't cold call as many owners as we'd like. That was the plan right out of the box, and things change. Everyone has a plan until they get punched in the face. And a lot of things happen. For whatever reason, when we buy a deal, we don't buy one, we buy like 3, and then we don't buy anything for 7 months, and they come in bunches. So then it just becomes all hands on deck, not only doing property walks and unit walks, due diligence, but then you sort of just, you have everything going on. So I just saw the skill set. I just say, hey, if he did this for, he's a stockbroker, this is going to be easy. But yeah, the cold calling was not only to brokers, but to owners, to managers, all your due diligence, your third party reports, just making sure you had everything lined up, and, you can put as many deals out, get as many deals into the inbox so you can underwrite as many deals as you possibly can.
Okay. Cool. Well, yeah, I mean, I'm very glad to hear about you guys' story. I think, that's part of what I advocate for as well. Partnership, you need to date and kind of get to know each other a little bit and kind of grow from there. I'm very fortunate to have a good partner on the development side myself. And shifting gear a little bit, one of the reasons I wanted you guys to have you guys on is because you guys are in Long Island in New York area, and these properties are in southeast part of the country and in Ohio. How do you guys manage these properties?
So I think what may be helpful, as I've outlined stuff, and I think parlays into what you're asking is, when you buy out a state, you need to have a team that does a lot of different things. So John, what I'll throw to you is, maybe do you want to give, try to limit it to 2-3 minutes of who are some of the key people in the team that we need to have, and if any fall through the cracks or anything, I'll step in and add on after you.
Yeah, no, I think that's a phenomenal question. I think that's, everybody, there's a big trend of buying stuff out of state, and there's a level of trust that you have to give up. You can't be up everybody's, for lack of a better term, up everybody's ass. But the team members are, you need a good attorney, you need a good accountant, you need a good property manager, you need a good contractor, or / your property manager. Those are your really core team members, right? You have to have an attorney that either find a local attorney, or, our attorney's local here, but they have resources throughout the country, or at least where we buy. Our accountants understand everything. So one thing that we do really well, we get a deal in, we underwrite it, we offer. Once we get a contract, we have a call with our attorney and our accountant on the exact same call. They work really well together, and we negotiate the whole contract together. So, talking about, purchase price allocations and understanding that. And then one step further, when you bring your bank in, our attorney and our accountant are on those calls, because some banks put in audited financials. And if you don't know what audited financials are and you sign that, you're spending a ton of money on your financial reporting. So having them all together and on the same page, so you can go back to the lender with one set of comments and you don't have to go back and forth, it saves a lot of time. It's a lot of, there's great efficiencies. So having a really good accountant, a really good lawyer is absolutely critical. On our deals, we raise money. So you got to have a good real estate attorney. You also have a good corporate attorney. The firm we work with they're all in-house. So everybody works well and plays nice in the sandbox with each other. And then on the other side of that, you have to have really good relationships with brokers, and you have to have, I always tell people out of the box, you got to find a good mortgage broker, because if you want to run the debt process and you want to go to 10, 15 banks and you want to manage that all, that's fine. But if you're trying to put together a deal and raise money and find deals and do all of it and do due diligence, the best, I always recommend having a good mortgage broker that'll handle that process for you. So the team members that you definitely need: attorney, CPA, mortgage broker, good local relationships with brokers, and then third-party management, if that's the route you're going, is absolutely critical. And you can't just have one. The hardest relationship to manage and the hardest team member to manage is the guy that just came up short and you did not hire him to do your third-party management, because if you ever fire your manager, you need a backup manager. So that's the hardest relationship to manage, but those are the team members that are absolutely critical for out-of-state investing and doing what we do, buying 100, 150 unit properties outside of our backyard.
Is the lawyer pretty transferable, or do you need somebody to know, say, specifics or certain state specific laws? Or
Yeah, so our attorney, it's a good question, and the answer is yes. I would, if you have an attorney you're working with, you could ask them the questions. What our attorney does, they have local people that they work with. They're a firm based out of New York. They have an office in Florida, but they've done a ton of transactions throughout the country. And just, he's not a guy that was, he didn't just get his, just pass the bar exam. He's been doing this for quite some time. So he has relationships, not only, with a ton of different title companies, a ton of attorneys, and even for our deals in Ohio, he works with a local firm out there that any state-specific issue that he may not or may know of, everything, he has relationships in each of these states and areas.
They're kind of national. Like he's not Matthew as the bar, the Rainmaker, or whatever that movie.
Yes, correct. Now their firm is not, they don't have an office in every state, but they have resources and referrals in areas if they need a state-specific issue that comes up.
That's great.
Yeah, I think the one that fell through the cracks was insurance, but that goes kind of without saying. Um, yeah, I think, really the most important one when you're out of state is your property management. Management's going to make or break your deal. A great deal can be ruined by a bad manager, and an okay deal or a bad deal will do okay or decent with a really good manager. So having that relationship is hypercritical. Choosing a manager is a very long topic. We just really don't have the time to get into it, but there's a ton of resources out there on how to do that. So make sure you understand the things you need to look for when you're finding a manager. Really interview them, ask them questions. The things I would look for is track record in your area and the same types of deals that you're buying. And then, like John said, have, 1, 2, 3 other managers in mind that if something doesn't go well, because it happens, we've fired managers ourselves, you have somebody else that you can go to and step in with, a couple weeks or several weeks and kind of, hopefully right the ship.
Okay.
Yeah, I think to Chris's point on management, you got to be quick to pull the trigger if it's not going right. We've all kept the manager a little bit longer than we should have. The first deal I ever bought, I fired my manager after 8 months. Found out he was just doing stuff that was not right. And it was, I spoke to a couple advisors that I know, and they said, no, just hang in there. You're getting ready to sell the property. And if I did not fire him and brought in another manager, I don't know what would have happened with the deal, but that you got to be quick. If the business plan is not being executed, you got to be quick to pull that trigger, because that, as Chris said, most important team member. You could find an attorney, you could find an accountant, you could find all of those people. A good on-site and a good third-party manager is key to the success outside if you're investing out of state.
I know Chris, you said there's a lot to get into, but what are some? Give me 2 pitfalls that people often make when vetting or hiring property manager.
Finding the deal first and finding the manager second. That's got to be the largest one. You should have your
You would
manager
recommend the other way around?
You should be interviewing your manager before, while you're looking at deals, right? You should be starting all these relationships together. And look, if you find something that you think is amazing right away, move on it. But chances are that's not going to happen either. If you start calling brokers and agents and looking at deals tomorrow, it's probably going to take you a few months, if not several months, to find something that makes sense. You should be able to find a manager in that time period. You should be vetting them before you have the property, because when we buy all of our properties, it is not only a conversation between John, myself, Don, some of our investors. It's a heavy conversation with our manager too, because there are managers that specialize in, heavy renovation type deals. There's ones that specialize in Class C, Class A. So if you have a deal that doesn't really fit what they typically do, it could be a fantastic deal, but it could turn into a bad deal if they're not the right type of manager for it. So we have a conversation as we get the deal, as we're creating the business plan, as we're looking at what we can do with the property and what the opportunity is. And we're having that discussion with them and talking through, a couple different strategies of like, hey, should we, spend 5,000 units? Should we spend 15,000 units? Should we add a pool? Should we do the roofs? How are the ACs? What's this area like? What do we think we can take rents to? Is there anything on the expense side that we can do? There's many, many things that we look at, and we want to make sure that they also believe in the property and the vision that we have for this, because if they don't believe, as soon as you start hitting some bumps in the road along the way, and you will, unless you're buying a brand new built property and you're just going to manage it and maintain it, you're going to hit bumps along the way. If they don't believe in that vision, as soon as you start hitting those bumps, they're going to say, whoa, I told you this wasn't going to work. Or, I think we need to tell you what I said. But if everybody has a vision, you all believe in it, they're much more likely to work through it. And look, maybe the answer is to lower rents. Maybe the answer is to do something else and we were wrong, but at least we all had the same vision going into it.
All right. This relates to one of the questions we'll touch on in a little bit. How do you guys finance all these properties?
Yeah, so I think that's good, because one of the things I had was how do we structure deals. So maybe we'll tie that into all of it. So the financing and all that. So John, you want to kick it off for, when we get a deal, how do we structure the entire thing?
Yeah, so it starts off with we do things. We've bought deals all cash. We've bought deals with higher leverage loans. I think that the first question you have to ask yourself is, what type of risk do you have? But the way, we've done Freddie Mac, Fannie Mae, small balance, agency debt. We've also done, heavy levered bridge debt. So we've done a little of everything, but for the most part, our deals are typically structured anywhere between 65 and 75% debt, bank debt, whether it's bridge or stable agency duff or regular bank debt. And then, 35 to 25% equity. Additionally, in our equity, Toro typically puts in, I say between 20 and 30%, but if you look at all our deals, Toro and or, parents and very close, family is very close to 50% of the equity in a lot of our deals. Now, that's not the case going forward all the time, but, we're typically anywhere between 20 to 30% of the total equity. And our equity is typically, like I said, 25 to 35% of the total capital stack. And the other part of that is typically some type of bank financing, whether it be local bank, bridge debt, and or agency debt.
Okay, great. Thanks for that. Chris, what else was on your agenda?
Yeah, I think I think one thing that's obviously big is when we're going out of state, everybody wants to talk about markets. How do you pick markets? How do you find markets? How do you know what's a good market? How do you find data on the markets? Again, this is something that we've done presentations on for an hour and a half, so we could go super deep. But again, let's try to keep it as high level as we can. John, you want to kick it off? Just how you went about that?
Yeah, I tell people all the time, it's the best way to do it is, you got to whittle it down, right? The country is massive. If you're in California or if you're in Florida or you're in Ohio, wherever you are, you got to start with, I joke around, but, places that you want to visit, right? Those are typically areas that other people want to visit. So there could be population or maybe you have family members. That's an easy way to take the country and start putting it into some buckets. The next part that, I always talk about is you can't just pick one market out of the box, right? I have a friend who, out of the box, they wanted to do Chattanooga, Tennessee, and they spent 3 years and they never had a deal because the velocity of the deals, there's just not many transactions on an annual basis. And it was very difficult to come across it. So when I recommend market data, market research, the things you look for is job growth. The things you look for is, job growth going up, because where jobs are being created, population will trend towards. So job growth, population growth, and supply and demand. Those are the three things that we check before we go into any market, understanding how many properties are being built, single family and multifamily units are coming online. Is there population growth? Is there employment? If there is, and we check off all those boxes, that's a market that we like. I always say, pick 10, whittle it down to 3, and be an expert in 3 markets. Because if you pick one, you may or may not have enough transactions there. But if you pick 3 and you're an expert in 3 areas, you should be able to come across a deal, on the quicker side.
How are you guys how do you gauge supply?
The best way to do it is, what were you going to say, Chris?
I was just going to say there's tons of reports available. A lot of the ways we get information on markets is from commercial brokers. Part of their job is supplying a lot of this information. So they have subscriptions to Yardi Matrix, CoStar, Reese, all these different resources. So instead of you going out there, you want to do some research to find, markets. You don't want to just call 70 markets in the country and get this information and then start doing it. But like John said, there's ways to figure out markets that you think, that if you're looking for areas that are growing, Google, population growth for XYZ city or town or state. And then you just start making a list and then you whittle it down. And the truth of the matter is too, if you pick, if you do your basic research and you pick 5 markets and then you go get this information, there's a good chance you're probably going to eliminate one once you start doing more research. So don't worry about being stuck in those markets. There's probably a good chance, you pick 5, you pick 7, you pick 3, you get in there and you realize, because I only did, 5 hours worth of research or 5 minutes worth of research, I didn't know X, Y, and Z. So for that reason, I'm not interested. So, Google search areas that you know of or that you've heard that are hot markets, start there, figure out what metrics you want to see. It can be as simple as, hey, I want to be within a 5-hour drive because I don't like flying. Or it could be, I want to be in areas where I can get a direct flight to from California or wherever I live. It could be, I want to be in markets that are warm year round because I live in the cold. Whatever, some things are going to be specific to you, and it's not going to be like, I want the fastest growing population market in the country. That's great, but there's other things that go into it too. So start with basic research, contact some brokers. They'll have information readily available for you. It's not going to be tough. It's not like they're going to spend hours putting it together. And then you can just start digging more. A couple resources would be, like, you can check the census website, which I think is bls.gov. So bradleylukesam.gov. Trying to remember. I know there's some other ones. John, do you remember some of the other ones? It's been a while since we've
bls.gov. You could economic development. Yeah, a good way to do it also is look at the economic development and economic planning for any, Nashville economic development or economic, look what their future plan is. I forgot the name of the website. It's like, areadevelopment.com typically has some areas that have some good stuff going on. You can use the census data also, the census website to track population growth and job growth and stats like that. But, and if you Google, best ways to, find any type of research, Google is basically the answer to every single question in real estate. If you have any questions, you can't go wrong with that. City data, that's another great website. But the other thing I'd like, Chris, and I don't want to roll over it, you want to pick places where you want to go, because, you might have all the best research in the world that, Akron, Ohio or Mobile, Alabama is the best place in the country. But if you have no interest going there and it takes 3 flights to get there, weigh that out, because there's something to be said about connecting flights and all that stuff, especially what's going on now. So I think it's important, but all those websites are super, super helpful. And the websites only tell you half the information, right? So, and then use brokers, use mortgage brokers, use those people for research, and they will supply you with anything you really need to at least read enough information to decide if it's something you want to pursue or not.
Yeah.
Yeah. And there can be a tax write-off too, right? For the trips. But John, did you say you have a hard stop at the top of the hour, or what?
Yeah, my mom's actually watching my daughter right now, so I could probably hang in a little bit longer.
Okay. So Chris, I want to make sure you present the stuff you do, and then I want to touch on
I think
a little bit, and then save enough time for Q&A as well.
Yeah, I think, we'll go 15 more minutes, I think, and then, we'll do Q&A because I don't want to go too long. But I think some of the other good things to talk about are, like what it is exactly we do, like what are our responsibilities at Toro, how we actually manage those responsibilities, how we manage the deals, and kind of what a lot of our day-to-day stuff is. So John, again, if you want to go with that where you will, and I'm sure I'll pick up some other things and go after you.
Yeah. So I would say, obviously divide and conquer to the best that you can. When we first started, we were figuring it out like everybody else, right? You don't start perfect. You educate yourself the best you can. You try and put systems in place, and we're working through those systems daily to tweak them to be a well-oiled machine. But some little things that we are working on. My partner is more of the spreadsheet detail. He likes that stuff. Give me a piece of paper and a pen, and I'm going to get to a purchase price, and it's probably going to be within a couple $100 of what the deal will sell for. But I am more on the high level. Let me, I'm the face of the franchise, if you could say, right? I'm the one that's, interfacing with the brokers, as is Chris. We're the ones that are, underwriting the deals. I'm doing the high level. Chris is getting into the nitty gritty. We do have a full-time admin who handles a lot of, the investor relations and getting out documents and K1s and stuff like that. And then my partner's more on the day-to-day asset management, making sure, the money and managing that stuff. Chris and I also chime in there too. That's sort of the big picture. Now we are trying to fine tune those and really make them specific, but, we're using some technology to, Monday.com is something we use to, organize it, a weekly to-do list, making sure everybody's updated. We do have a back office investor portal through Juniper Square. So every one of our investors gets a unique login where all their information is stored there, all the quarterly updates, all the webinars, all the K1s, all the distributions. We're integrating that, more and more as we're growing. Some other stuff that we're using, any type of delegation is important, right? Chris handles a lot of the stuff in Jacksonville, and that's his baby, and he runs with it. I handle a lot of the stuff up in Columbus, and we have about 800 units in each of the markets, and it's a little bit of a mix, right? We do overlap in certain areas, and we have our Monday morning meetings. We touch base all the time now. It's more virtual. When we're in the office, we don't have individual offices. It's an open floor plan. So, if someone needs something, you look over and, hey, Chris, can you do this? And we try and keep it, super, everyone's involved in everything, but we all have our roles that we focus on. And then when we're buying a deal, it's all hands on deck on investor relations and raising money and setting up investor meetings. And, some people want to talk to me, some people want to talk to Dom, some people like to talk to Chris. And it's just a matter of, making sure that it's all organized. So as you're going through the process, the due diligence is getting done, making sure that the investors are getting, their updates, what's going on. Here's the investor doc. So you're just trying to keep it all organized, and everyone takes their piece and runs with it. While we're not buying deals, there's obviously a lot more overlap. And then when once we're underwriting and we're through the deals, that's when the roles sort of get defined on, hey, make sure we have our PTA set up, make sure we have all our lender docs and all that stuff. And it's just sort of allocated on, I don't want to say on a per deal basis, but we all have our roles, and we try and, we try and make sure no one's stepping on each other's toes while we're all collaborating, internally to make sure everything's getting done, when it's supposed to get done.
How often are you guys checking in with your property managers?
So we have weekly calls set up, bare minimum weekly, but we are on the phone with them. Our projects are heavy lifting. We do a lot of heavy lifting deals. So, there's multiple times where it's 2-3 times a day, and that might be Chris or me, or, hey, we ran into this problem, but we probably have a conversation with our managers, if not daily, every other day. And then we have a scheduled call every week where we go through our weekly reporting, where they send us the reports, we go through them, and then we walk through that report on a weekly basis, bare minimum weekly. Corona aside, we're typically on site no less than quarterly for stable deals, and on deals that have heavy lifting, typically every 3 to 6 weeks, one of us will be on site, walking stuff, checking stuff, making sure things are going right. But that's what we do.
Yeah, I think what might be helpful too is basically our role in the whole kind of ecosystem is we kind of put a lot of different pieces together. So we're kind of the person sitting in the middle, putting everything together to be able to actually purchase the property, to be able to manage the property, and then eventually sell it. So, we have the property managers that we oversee. They handle the day-to-day stuff. We kind of oversee the bigger picture, more of like the business plan, the financial side, keeping up to date on the market and where things are trending. We decide a lot of stuff of where the opportunity is with the property, with input from the manager, but it's more our responsibility. We obviously have to come up with the capital, both on the debt side and the equity side. So communicating with the mortgage brokers and the lenders, consistently staying up to date on what the current market is, what's available, what types of deals support different types of loans, staying up to date with all of our interested investors, continually gathering new leads for investors, staying in touch with them, updating them on what's going on with new properties as well as the properties we own. We're consistently looking at different reports that we get on different periods. So we get weekly reports, we get quarterly financials, we get monthly financials. We also look at financials on a quarterly basis. We'll look at our financials from the previous quarter to this quarter. We'll look at them versus our budget that we gave to investors and we keep internally. We'll look at it versus, last year's quarter at the same period as this one, year over year, things like that. So we analyze it in a lot of different ways. And then also we have to put together updates for our investors. And then eventually, we'll look to sell the property as well. So we try to analyze where the market is, where it's going, how the property sits compared to others. Typically, we don't have that conversation until we've spent the money we've raised to improve the property. So like John said, all the properties we buy, we're doing some sort of improvements. Could be a lot, could be more moderate. And then, kind of how it relates in the grand scheme of not only the business plan we put in front of people and how it meets their expectations, but along with our portfolio, the market, other things like that. So we kind of sit in the middle of a lot of different pieces and just keep the ship going as straight as possible.
Cool. That sounds like a lot of work.
It can be. But, it sounds like a lot, but it's, it's fairly manageable. A lot of the things interplay into each other. A lot of the stuff is upfront legwork. Like once you meet a mortgage broker and you have a conversation with them, you're continually looking at deals. So it's not like you have to make extra calls to understand what's going on in the lending world. You're continually talking with your PM. So as things happen, when we do market updates on rents, we're already doing that as we're analyzing our own property. So a lot of the things, they have a lot of crossover.
Yeah, and there's that flywheel effect, right? Or snowball.
Exactly,
So,
yeah. When we go down to visit our own properties, we're touring properties we can buy. We're touring properties that we sold. We're touring, rental comps. So as you start to get more and more involved and do more and more, a lot of the things overlap and you are producing a lot, but your time is actually, stacked on top of each other in a way.
Great. Well, the elephant in the room, COVID.
Mm-hmm.
How's it been? What are your rent collections? What kind of adjustments have you had to make lately?
You want to start?
So I'll jump in. I mean, so the easy part is that there's a lot of government help. So we had 1 month so far from March to today, and we just got off all our management calls on Wednesday. Almost across the board, our July is going to look really, really strong. We had one rocky month, and it was May. It was May or June. No, it was May. Yeah, May.
Yeah, it was May.
June collections were okay. It was May, where now our properties. We have about 12 active properties right now. Across the board, we've been basically in the high 90s, 95 to 99% occupied, and about 94 to 98% collected across the board. We did have 2 properties in May that collected 86 and 88%, but a lot of those tenants have actually made their payments and continue to make their payment plans. Now, we've worked with some tenants through COVID, working out payment plans and whole 9 yards, but so far, I don't want to say we've gotten out unscathed. We've been pretty fortunate. I think a lot of the country has. Now, we're 2 days away from, a lot of things changing, or who knows what's going to change, and if they're going to do another stimulus, and nobody really knows our eviction is going to be allowed or not. We have not had as many tenants as I thought would take advantage of the no evictions. A lot of our tenants have been paying. We've had a couple. I think in Jacksonville we have a total of about just under 800 units, and my number could be off, but I think we had more or less about like 20, 30 tenants that were COVID problems. Right? It wasn't many. Now there are a ton of people out of work, and we'll see what happens with unemployment, and we all have our 2 cents there. What we did see was just a velocity of the market has slowed down. So I think transactions are down 70% from last year. So there's not a lot of transactions that are transacting. I know from our
I'm sorry,
we are not sellers.
Down 70% or 70% of last year?
Down. So if there was let's just say, if there was 10 transactions last year at this time, there was only 3 transactions now.
I thought it was usually the other one where it's 30% dip or so, kind of 30-40% dip.
Yeah, no, it's about 70%.
Not a dip in value, just a dip in the number of deals.
The transaction volume, yeah.
Yes, yeah.
Transaction volume. So it's not, properties are still trading at ridiculously low cap rates and very, very high value. So when a deal does transact, it's transacting with really very little to no discount, if at all, if a discount even is there. But transactions have gone down. So there's a lot of capital chasing deals. But like from our standpoint, we are not sellers right now. I just don't feel like if we brought a property to market, we're going to get fair pricing. I think people want discounts. I mean, we did have a deal that fell out of contract in Corona, and they literally asked for a retrade, and the basis of their retrade was they wanted a Corona discount. And that's just not going to happen because we're not, we have 7 years left on the loan. We're just not going to sell it. We're not going to give someone a discount because they want it. So, and then, we were thinking about going back to market, and the broker that was working the deal for us ended up calling people, and almost to a T, every single person has basically been asking, well, what's the discount for it now? And he keeps telling them, listen, there's really not much motivation to sell. They'll just keep it. The property is 99% occupied, extremely well collected. We're in the mid 90s, and our average rent from April to today is actually up 6.5%. So we went into Corona, and our rent right now is actually higher than what we were going into Corona. So there's no reason to sell at a discount. We're doing, the property. Our June was actually the best financial month on record in 4 years since we bought the property. So there's no, we were selling it because we were getting a decent price, but there's no reason to sell anymore, or not give a discount. But the way I look at Corona is I'm not underwriting for rent growth for the next year and a half, till the end of 2021. If anything, I might actually put a
underwriting for a decline.
I was about to say I'd probably put a decline in rents over the next year and a half. We're looking at research for 2022 and 2023 because there are 42 million people out of work, and there's no real sign. Some people will not have jobs for quite some time, right? If there's 10 restaurants and 3 of them went out of business and now there's 7 left, 2 of them might still be closed. Now you have 5 restaurants battling for 10 restaurants worth of jobs. So there's going to be a lot of unemployment. I think, some of our markets, Jacksonville went from 3 to 10% unemployment through this period of time. Now it's going to take some time to get back down to 4, 5. We'll probably hover in and around 10 to 8 for the next year and a half. So that's how we're looking at the deal, right? Either more concession, more bad debt, rent decline. And that's how we're hanging in. Now we're offering on deals. We've offered on a ton of deals from April to today. I mean, we're not close on our offers, but we're justifying it. It's, hey, listen, I have brokers telling me every day, oh, rent's going up. I just told you, right? Our rent's gone up, right? So our broker's telling the same story, but that doesn't mean it's going to continue for the next 6 months. I think the next 6 to 18 months are going to be extremely interesting. And I don't think that people shouldn't be offering. I think a good deal is a good deal if it's underwritten to what you believe is fair underwriting. And if you buy a deal right, regardless of what's going on in the world, typically real estate, time heals all wounds. As long as you're going in with good leverage, you're not over leveraging yourself. You're comfortable in your basis. You're comfortable with what you're buying the property for. But if you underwrite to that stuff and you have a 7 or 10 year vision on your property, you'll probably be fine, right? You could overcome stuff. But if you go in with a 90% bridge loan, super leveraged, with a, not as good interest rate, and you got a super heavy value add renovation plan, I don't know what's going to happen to those deals, but I still think that, fundamentally the multifamily space is great. People need a place to live. They always need a place to live. If you provide a safe, clean, comfortable, affordable place to live, you should do fine. If you're, trying to push rents to, a market leader, maybe not. But fundamentally, nothing's changed. People are moving out, or not people are moving back into houses, but there's a huge demand for housing and affordable housing, and that's the space that we're in. We're not Section 8, but we are. Affordability is important to us. I think that space will still do well, but I think the next 18 months could be interesting to see what happens.
Cool.
Yeah, I think I just want to really quickly. I think for me, what's basically happened in the last 4 months, and you say it's only been 4 months on deals that we're buying that we're planning on holding 5, 7, 10 years. 4 months in the grand scheme of things is not that long of a time, even though it's personally felt like a lifetime. It just feels like we've been put in almost a stasis, and the market hasn't quite been impacted yet. If unemployment benefits go out the window tomorrow, if forbearance programs go out the window tomorrow, if eviction moratoriums stay in place, landlords are going to start feeling some pain, and you're going to see some problems. Basically any property that was going to have problems has been floated in one means or another. Their tenants that couldn't pay were getting extra money. The mortgages they couldn't pay, well, they didn't have to pay them for a couple months. The one negative thing that's really hit people is they haven't been able to evict people in a lot of places, but from everybody I've spoken to, it hasn't been a huge amount. Our number's been roughly around 2 to 3% of tenants that we haven't been able to evict. So John was very close when he said 20, 30 people out of 800 in Jacksonville. So, nothing's really happened. So, a lot of people are still trying to sell deals saying, oh, well, the property's 95% collected and you can do, you can keep it the same. The only reason we saw some discounts when people were buying was because the debt world changed a lot. A lot of people stopped lending. Bridge lenders stopped lending because they didn't know how to price things. They're having the same problems we are. But your lenders, like your agencies, so your Fannie and Freddie, they were just making you have significantly higher reserves up front, which increased the amount of equity you would need to bring to the table by anywhere from 5 to 15%, depending upon the loan, the deal, leverage, et cetera. So that obviously makes, if you bought the same deal pre-COVID as you bought it in COVID, and all of a sudden now you need 5 to 15% more equity and nothing else has changed, your returns are going to go down. So because of that, you would want to see that reflected in the price. So you've seen a little bit of a dip in values, maybe 5%, maybe 10%. But in the last couple of months, as some of those lending restrictions have eased off, we've seen people start to push more and more on pricing. We've seen a little bit more deals come to market, but still a fraction of what they were, this time last year or even pre-COVID. And to John's point, a lot of stuff is disappearing. The CARES Act is up in a couple days. A lot of the forbearance programs are ending this month or next month, the end of next month. I think the single family residential government forbearance ends August 31st or 30th. And there's numbers as much as like a third of people haven't been paying their mortgages, whether that's because they have to, or they just feel not having to pay, I'm just going to take advantage of it. Who knows? But if all of a sudden people don't have unemployment money, stimulus money, or far less, which is what seems likely, it seems like we're going to have a reduction in what people are getting in unemployment benefits. That's going to hurt people. If their forbearance that they didn't have to pay goes away and now they have to pay their mortgage, that's going to hurt some people. So I think it's been too early to really know what's going to happen. And I think the second half of this year is really going to play a larger role in, the grand scheme of things when we look back in, several years.
Yeah, I mean, in the grand scheme of things, even say optimistically, vaccine comes January next year, like we're in the third, fourth inning of this, so still got bits of ways to go. Let's go to some questions. You guys want to do that?
Let's do it.
This one is via Facebook. Somebody's asking, what's your view on the Philly market now, if you're still in touch or the pulse of that?
The what market?
Philly. For this
one.
Philly.
Philly.
You can answer that.
Yeah, it's a good question. We actually had a buddy of mine on our podcast, the Real Estate Investment Experience, Gabe Plague, who is in Philly, doing a ton of deals in Philly. It's interesting, right? It's not too far from New York. There's a lot of positive things. There's a lot of growth. There's a lot of areas that are going through tremendous gentrification. I haven't bought a deal in Philly probably since 2015 or probably 2015. So it's been a little while, but it's like anything else. A market is huge. Philadelphia is a relatively large, MSA or part of an MSA. The submarket's going to be the key. The key to success is on the submarkets. You could be looking at one Class A building, you turn around and you got burned down row houses all over the place in Philly. So I think just understanding the submarket and exactly where you're looking and, following the path of progress is important there. But I do think Philly still has some really strong demographics and growth and everything. So it's probably good, but I haven't been there in a while.
Okay. Yeah. And that's kind of why I sort of caveated that, because in case you weren't plugged in anymore.
Yeah. The one thing I would say to that, and I know next to nothing about Philly, I looked at it for all of 2 weeks. However, there's a ton of people that have left New York since this all went down. I was living in Brooklyn before this for 3 years. I'm now an hour and a half outside the city on Long Island. There's a ton of people that left. Basically, anybody that could afford to leave left in March. And people went Long Island, people went Connecticut, people went upstate, New England, and then people went down the coast. So one thing to look at and consider is how, and it's going to be speculation, or it's going to be looking at reports and things of that nature. But how does that movement, how long does this movement last, and how does that affect people migrating from a place like New York to Philly? Also, another thing to consider too is as this work from home movement continues to grow, how does that affect higher cost of living cities like New York City? You know, do people who have a job in New York City but still want that urban environment at a cheaper price move a couple hours south to Philly? They still get that, you know, nice urban environment for a cheaper price. They're not super far from the city, so if they ever have to pop in the office once a quarter for meetings, they can, but they can still work from home. You know, how does that play into that too? So those are just two thoughts I had of as you look at Philly to consider.
Yeah. And let's see. This one we kind of touched on it, but if you can give a quick recap, knowing guys what you know now in your experience, what advice would you give to new people trying to find their first deal? Cold call.
I think for me, it's really broad. I think it really depends what you want to do and what you want to target. You know, we don't do a lot of cold calling anymore, and it's why we stopped really early on, because any property that's over 100 units that's in the markets we're looking in, which typically have 1 million plus population in the MSA, so that's the city and the surrounding suburbs, they've almost all been sold to a professional group, somebody that at least thinks they know what they're doing. For the most part, they have a decent understanding. We get people that reach out to us all the time and say, why would, you know, it's very rare that we say to somebody, yeah, we'll sell to you instead of going to a broker. You know, we're going to be fairly tapped into the market. We know what it's going to be worth. So unless it's a very unique situation, us personally, we didn't see the value in spending a tremendous amount of time cold calling. You know, brokers at ARA, Cushman, CBRE, they spend 50, 60, 70 hours a week forming relationships with owners in these markets. How am I going to do a better job? Probably having less time, but also, you know, telling them, you know, I'll buy it. I'm not going to get, you know, I may or may not get you the best price. So it's not the easiest thing to do. However, the converse, I think if you were looking for, you know, duplexes, 10 units, 30 units, 50 units, smaller markets, yeah, I think you could definitely go direct to owner. I think especially as, you know, things do get potentially choppy. A lot of people that own property also have, you know, made money in other things. So they might own other businesses. You know, they might have other things of money. They may have a single family residence. They may start having to decide, you know, what to cut loose and what to keep. So you may have some opportunities coming available there. There's just much less competition going direct to owner in that space than I think some other spaces. So in terms of that, I think it matters. But the original question was, what would I do differently? Correct?
Yes.
Um,
Or just for somebody that's trying to, you know, get
Yeah.
started or get their first deal.
I don't know. John, do you have an answer?
You gotta throw hooks in the water, right? You know, cold calling works, direct mail works, calling brokers works, calling management companies. You gotta try something. The one thing I can rest assured, no one's calling you tomorrow, or you're not gonna wake up with an apartment under your pillow, right? The apartment fairy's not coming and just dropping one off for you. So the best thing to do, and what I would do different is, you know, I would, you know, what I used to tell people, and, you know, when I was hiring people for, you know, whatever job it was when I was working, is when you stop making calls, there's someone out there that's going to make a call, and that next call could be the deal. So, you know, and that could be a direct mail. It could be, you know, it could be a handwritten letter. It could be, you know, paying a company to do it. But I would just say the one thing that I would do differently, or what I would recommend, is, you know, don't try everything, right? You can't just call a broker and say, give me your best deal. It's not going to happen. But at the same time, you know, picking up the phone and calling 300 unit property owners, you know, you call me and you say, I'm going to buy your deal. You're probably not going to pay a 4 cap, right? So I don't think I would sell to you. But as Chris mentioned, you know, if you find the right guy in the right situation, you know, you never know. He may be willing to get rid of it. So I would just, I would target markets where there might be some more economic problems on the horizon, and maybe start calling owners there, right? They're probably going to be more inclined to sell quicker than, you know, a super fundamental stable market that, you know, you're not going to have much ups and downs, and there's probably not a lot going wrong. So if you wanted to really get your hands dirty, I would say, you know, probably targeting areas where there could be more economic issues on the horizon, and maybe starting there and starting to call those owners, because they're going to be the ones to feel it first, or maybe they're willing to get out of something for, significantly cheaper to walk away.
Yeah, I think one thing that I wish I had done that I've only started doing that's not directly correlated, but it's just networking with more people. And not just like, it's great to come to one of these things, but it's reach out to 5 people on here and have a 15-minute conversation and just be like, hey, I'm looking to do this. What are you looking to do? And it doesn't have to be like, hey, let's work together then, but you just start making those connections. And, there's countless people that I've met through this that we've put business towards. They've put business towards us. And just because I know what they do and I know they're a good person, and, you see somebody online or you see something that you're doing and you don't really know who they are. In a 15-minute call, you're not really going to know who they are either, but that's how you really start to form those relationships. And it's not something I really like doing, or something I'm naturally predisposed to do, or something I find overly enjoyable. But I do think there's a tremendous amount of value in it. So I would just encourage people to reach out to more people, LinkedIn, Facebook, meetups, whatever, and just start, getting to know people a little bit more.
Yeah, that's great. I mean, the meetups, you start going to the same one and you start seeing some of the same people, or you hear
100%.
somebody else like, oh, okay, this person's legit, instead of some schmuck that's gonna disappear next month kind of thing. So I'm gonna phrase this question a little bit more broadly. This is relating to your story, Chris. How would you go about finding another team, or letting somebody know, hey, I have a particular skill that I think that we could complement, or work well together?
Yeah, I think if you're looking, I think the advice is going to be very similar. So if you're looking for an internship, you're looking for a job, you're looking to partner with someone, you're looking to joint venture, really what you got to find, you just got to talk to a ton of people and find the right person that fits. So it goes hand in hand with what I'm saying. It's talk to 100 people, because it'll be that it'll be the 100th person you talk to that is what you're looking for. If you're looking for a job, just start talking to a bunch of firms on what you can bring to the table. There's a ton of ways to add value. I think, John, you said you got to run, right?
Yeah, I'm going to get out of here, guys. Obviously, I appreciate it, Jason. I appreciate you having us on. Chris is here. Feel free to ask me any questions. And if you guys have any questions, don't hesitate to reach out.
Okay. Thanks so much, John.
Yep. See you, bud. I think it's really, a lot of it's limited to, your creativity and what you can bring to the table. Like a lot of beginner investors, they don't have experience. They don't have a track record. They don't have capital. They don't have connections, and that's fine. It's what else can you bring to the table? Are you good at website design? Can you design a website for somebody else? Can you do social media? Can you do, bookkeeping? Can you connect them with, a dance teacher for their kids, right? Like it's, as creative as you want to be, and it can be something, not directly correlated. The less correlated it is, the tougher it's going to be to find that person. Yeah. But it's really just trying to find something that you can bring to the table and finding the, kind of the person that fits into that. It's just a numbers game.
Let me ask this in a little different way. For you with John, what do you feel like you did differently, or that helped you stand out? Say, maybe, I don't, it might not be true, but I imagine maybe there are other people that John was thinking about potentially being on board, or.
Yeah, I think it was a lot of different things. I think one of the things that we did was we acted. So we put our money where our mouth is and we invested. Capital always helps, right? But that first deal, we were just passive investors. He could have, done that one deal and that could have been it. But then we said, hey, like, how can we help in other ways? And he said, well, we'll do some stuff. So it was just continually, trying to find ways to add value, and then setting out and doing what we said we were going to do. So we did a meetup ourselves for about 3.5 years, every single month, skipped a couple months. And it was, hey, we'll take that off your plate. You just show up, we'll run it. Then it was, we'll help you find deals in Kentucky, because we were going to try to build out like a mini portfolio with smaller properties there. So we helped find the 3 next properties we were going to buy there. We helped raise the money. We helped run it. He brought us on as a partnership. Then I think part of it was obviously, similar backgrounds, got along well. And I think all of that kind of played into it. And then what John doesn't always say is I took a pretty significant pay cut to move over on that trial basis. So it wasn't like, like you said, he didn't just hand me $100,000 out of the box. It was a trial thing. It was a small company, but for me, it was a way to get my foot in the door and see if we can make something work. And we had the conversation up front, like, hey, I can't do this forever. Let's try it for a couple months, see how it goes. And then, we'll adjust from there. So, I think it was also my willingness to take a chance on them that they were also willing to take a chance on me. And some of that relationship had started early.
Okay. If you guys got any more questions, feel free to pop them in. I got one last one, and we kind of did touch on this as well. But again, Chris, if you want to recap, what's your recommendation in the current environment to, whether you want to talk about multifamily or single family space?
I don't understand. I'm sorry.
Are you guys, what's your recommendation? You still would encourage people to look for deals, or everything hands off, or what?
No, I think so. As John said, a deal is a deal is a deal. So if a deal came along tomorrow, we would 100% buy it. We're just not being ultra aggressive because we know a lot of time would be wasted. So what we did when COVID hit was we said all the time we normally would put towards new acquisitions, we're going to adjust and work on a lot of our internal processes. So we're still constantly looking. I mean, we've offered on probably 10 deals through this time period. We just knew a lot of them were just much lower than what people wanted. So, we offer on deals, whether it's the price they want or not. So I would encourage people to continue to look. I would just say, be a little bit stricter, be a little bit more conservative on what you're doing. And especially if it's somebody that's newer and they're like, hey, should I start now? You should 100% start now and start having those conversations, because you're not going to waste time, but it's just time. And it's just going to help foster those relationships, because we have had conversations with brokers for many, many years before we get a pocket listing or an off-market deal. Those things don't just happen, right? Even if you had $5 million cash and you want to buy, a 30-unit property somewhere in Florida, they're not just going to hand you an off-market deal. That takes time. They want to know you for real. Just because you have money doesn't necessarily mean you're going to close and do what you say you're going to do. So you build that relationship up slowly, just like anything else. So I would actually say now's the best time to do it, because there's going to be, if you offer low today, they're going to be like, okay, that's fine. It's just COVID. Pre-COVID, if you just offered lower, they might think, this guy's just, jerking me around and doesn't really know what he's doing. So you've even got a little bit of a baked in excuse to start that relationship without necessarily having to, I don't want to say be serious, but in a way, you have some of that edge there to kind of, do what you need to do to feel comfortable. So I would 100% continue to look now, because there's still deals around. It's just a little bit tougher right now. And I think there's potential for deals in the near future that will make a lot of sense.
Okay. Yeah, no, those are great advice. And, I want to thank you, and John's not here anymore, but how can people get in touch with you, find out more about what you guys do?
Yeah, for sure. So, couple easy ways. Email, obviously. Mine's Chris at Toro Rep. John's is John at Toro Rep. JOHN, CHRIS. Pretty easy. Our website is tororep.com, TOROREP.com. That's how to check out the company. We're pretty active on social media and stuff too. So we have a podcast called The Real Estate Investing Experience. We release episodes twice a week. Jason was just on there. So if you want to hear a good one, go check out his. We're on social media. You can just search Chris Grenzig or John Cohen. And yeah, just reach out to us. We're, pretty happy to sit down with people, talk 15, 20 minutes, give some advice, help people out, connect people. So yeah, those are the best ways.
Cool. Well, thank you guys, everybody, for joining. I hope you got a lot of good value out of this. If you did, please share with your friends, invite them to the Facebook group. We also have a hub that kind of got some cool features that, you know, you can tag yourself in different roles so that you can better connect with people and professionals that you need. We got our Facebook group. You can pop in for asking for questions or referrals. I actually have a whole spreadsheet of all the professionals that I know and recommend, you know, whether it's contractors or architects, whatever you name it. Chris, you want to stick around for the breakout session, or you got to go?
Nope, I'm good.
All right, cool. Well, I'm gonna end the Facebook session here, and let's see. We got about a couple people bounced early, so let's do. Uh, oh, let's do maybe five people per group.
Yeah, I think that's good.
And let's see. Hopefully I can do this properly. And then we'll aim to come back by 5. I'm going to float around in the different rooms a little bit and kind of give you guys your prompts here. So, all right. Let's see. I think that's pretty even. Cool. Well, I'll see you all in a bit.